Hey everyone, welcome back to the channel. Today I'm breaking down our latest earnings season results. And trust me, there's plenty of good news to go around. Earnings season in a nutshell. 1. Another earnings season is over and we're pretty excited about how things turned out. 2. 23 out of our 33 portfolio names delivered good or great third quarter reports, helped by a still strong consumer and the massive AI boom. 3. Tech is on fire. 86% of S&P 500 tech companies beat sales estimates per FactSet. 3. The next best sectors were healthcare and real estate. 3. And on bottom line beats, communication services led the way at 95%. Big moves. 1. We initiated a position in Goldman Sachs after its strong third quarter results, so it's not in this review. 2. We exited Advanced Micro Devices, AMD, on Deck 31 due to underwhelming results and limited optimism going into the new year. Why these reviews matter. 1. Quarterly report cards aren't the only way to evaluate a stock, but they do give us insight into how well or poorly each company is executing. 2. At the end of the day, stock prices follow fundamentals, so we pay close attention to who's delivering and who isn't. We've split our holdings into 4 categories: the great, the good, the not so bad, and the ugly, with companies in each category listed alphabetically. The great alphabet. 1. Dominating with AI integration across all segments, driving more engagement and efficiency. Amazon. 2. Better than expected Q3. Strong growth in online sales, cloud, and advertising. Margins skyrocketed, and Q4 forecasts pleased investors. Amazon is a core holding. 3. Broadcom mixed headline numbers, but the earnings call revealed real strength, especially in custom AI chips. 4. BlackRock. Crushed expectations, hit a new record with $11.5 trillion in assets under management. 5. Costco. Pricier valuation, but its subscription model and consistent growth more than justify the premium. Costco is a core holding. 6. Disney beat on both sales and earnings. High cash flow. Streaming profitability ahead of estimates. Bonus news, Auli'i Cravalho returns as the voice of Moana in Disney's Moana 2. 7. Meta Platforms, huge Q3 beat strong future revenue guide. Daily active user count was slightly off, but no major concern. Meta is a core holding. 8. Morgan Stanley, solid quarter across all divisions. We later trimmed MS to invest more in Goldman Sachs. 9. Nvidia. Another fantastic quarter, even if it didn't blow minds as much as last time. Still very much an own it, don't trade it stock. Nvidia is a core holding. 10. Wells Fargo missed on revenue but showed leaner operations and strong profitability. Wells Fargo is a core holding. The good. 1. Apple, a better-than-feared quarter. Not perfect, but still posted a September quarter sales record. 2. Abbott Laboratories, raised earnings guidance for the 3rd straight quarter. 3. Bristol-Myers Squibb blew past expectations, driven by its blockbuster blood thinner and a recently approved schizophrenia drug. 4. CrowdStrike. Despite a high-profile software glitch this year, retention remains above 97%. Management's swift response paid off. 5. DuPont. Strong profitability and impressive free cash flow conversion. 6. Danaher, core holding. Investors worried about sustainability of bioprocessing improvements, but fundamentals look strong heading into 2025. 7. Home Depot, core holding. Higher interest rates weigh on housing, but same-store sales showed improvement. Also raised guidance. 8. Linde, core holding. Profits outpaced sales, showcasing efficiency in tough conditions. Watch for a bounce when global growth picks up. 9. Microsoft. Great innovation pipeline, but Q2 revenue guidance fell a bit short. Some still question how quickly AI investments will pay off. 10. Nextracker. The standout was a growing backlog, even beyond solid revenue and earnings beats. 11. Palo Alto Networks beat across the board and raised full-year guidance. 12. Salesforce, slight EPS miss overshadowed by strong revenue growth. Investors want to see sales momentum keep going, especially with AI-centric Agentforce on the horizon. 13. TJX Companies, core holding. Conservative guidance didn't worry us. Historically, TJX underpromises and overdelivers. The not so bad. 1. Katera Energy missed on sales but beat on earnings and free cash flow. 2. Eaton, core holding. No surprises. AI infrastructure demand remains a growth driver going into 2025. 3. Best Buy missed estimates, lowered guidance. We're still holding out hope for a rebound if AI PC sales or housing improvements pick up in 2025. 4. Dover. Weaker Q3 results, but we attribute it to recent asset sales. AI exposure remains intact. 5. GE Healthcare weak in China, but ex-China sales were decent. 6. Starbucks ugly pre-announcement, suspended 2025 guidance. New CEO Brian Niccol, formerly of Chipotle, aims to re-energize the brand. 7. Stanley Black & Decker. Underwhelming sales, but better than expected profitability. Turnaround plan is still on track. 8. Constellation Brands beer segment is thriving, hello Modelo, while wine and spirits is dragging. Might improve over the next 2 quarters. The ugly. 1. Honeywell, mixed quarter and guidance. Activist investor pressure might spark changes. 2. Eli Lilly, core holding. Disappointing quarter with lowered full-year guidance. However, its long-term diabetes and obesity franchise still makes it the Nvidia of pharma, per Jim Cramer. Key takeaways. 1. Most of our stocks rode a strong consumer backdrop and the unstoppable rise of AI. 2. We added Goldman Sachs because of its promising Q3 numbers, and we dropped AMD due to underperformance and muted outlook. 3. Quarterly checkups aren't the final word, but they do help us see which companies are delivering on their promises. And that's crucial for informed buying and selling. Thanks for watching. If you found this recap helpful, like this video and subscribe to stay up to date on our portfolio moves, market insights, and everything you need for successful investing. Disclaimer: all opinions are my own. This is not financial advice. Always do your own research or consult a professional before investing.